All right, hello everyone. Thanks for coming and paying attention to us. Excited for this panel today. My name is Colin Jones. I run a firm called Outerlands Capital. We specialize in liquid digital assets and building thoughtful portfolios there. But I'm excited to have this panel here today to talk about DeFi and TradFi and the interactions therein. So maybe we'll start with some quick intros. Just start here and tell us about yourself, what you're doing, and what gets you excited today.
All right, so I'm Anthony Hayot, head of DeFi for Nomadic Labs, which develops the Tezos Etherlink ecosystem.
Hi, everyone. I'm Rob Hadick. I'm a general partner at Dragonfly, $3 billion crypto-focused venture fund, and I'm a reformed TradFi guy. I used to run crypto at a large traditional hedge fund, long traditional financial career before that.
Hi guys, Olivier Mammet here. I'm the head of trading OTC for Gemini in the US. One of the main centralized exchange in the US. I've been there for about 4 years, involving spots, derivatives, and before that I used to trade in TradFi for about 15 years.
Hi everyone, Luke's here, co-founder and CEO of Satlayer. We're building the ultimate form of restaking protocol, Bitcoin restaking, building on top of Babylon and bringing both Bitcoin liquidity and shared security to all of crypto.
Great. This is good. This is going to be awesome. So we find ourselves in a very interesting week with distributions from the FTX estate happening, the Bybit pack happening. These are all on centralized platforms on the TradFi model, more or less. I think maybe let's level set a little bit because DeFi is a phrase that gets thrown around quite a bit. What do you mean when you think about DeFi? What kind of brought you to the space? What excites you about DeFi? What are we talking about when we talk about DeFi versus TradFi? Anthony?
Well, I think we are a couple of TradFi traders here on the panel, and I think it changes our view to the blockchain ecosystem. Some comes to the blockchain because it's a way to get out of central banks, or they want like the libertarian kind of play. Some others wants to give some financial inclusion to unbanked people. I think when you come from TradFi, you realize that blockchain is a perfect infrastructure layer for the financial system. So when I come to the Web3 and DeFi space, I really see how to onboard a good chunk of the financial system onto the blockchain.
Yeah, when I think about DeFi, I think about any sort of, call it on-chain, at least semi-decentralized financial services protocol. Obviously, Hyperliquid notwithstanding, still a great platform. I think coming from my background, so, and I worked at a large bank to start my career, I was at Goldman, and, you can look around, you could see the way things were done, the amount of intermediaries, the inefficiencies in the processes, the amount of opacity that existed in the market. It's clear that, and people don't know this, but 60% of the credit market is still not digitized, right? Like these things are still happening through chat or through OTCs that are not, and they're not being cleared through digital means. And so when you think about what that traditional market is and how just it hasn't been brought into the 21st or the 22nd century, the reality is we need something better. It has to be better than what it has been. And going from, these incremental changes that we've had over time just hasn't gotten the job done. And so when I look at, the risk that exists in the system, what I think to be true is if we want 24/7 trading, we want 24/7 payments, we want atomic composability between different assets, we want the ability to be able to use different types of collateral for different types of trades or, borrow, lend, or, in different geographies, that is going to have to exist on chain. And so bringing those TradFi folks into a DeFi ecosystem, even if there's ways that we need to get them more comfortable, that's what I think about. And that's why I think TradFi is going to come on chain.
Well, I mean, there's probably not much left for me to say because we all have the similar background. But I would say, yeah, I mean, at the end of the day, for me, DeFi is really all about the infrastructure. And that's where, coming from the banking side, as you were saying, so many inefficiencies in terms of just settling transactions, right? We just moved in equities in the US from T+2 to T+1 settlement, which was a massive undertaking. How are we going to take that from T+1 to 5 minutes, right? Only if you do that on chain, you can do it. And if you think about, for example, RWAs, people talking a lot about how tokenized treasuries have been such a great product the past year or so. And people usually say, well, it's because that's going to allow a lot of people who could not touch these fur before to be able to touch it now. But I don't really see it this way. For me, I see it more in the sense, well, you can now settle treasuries between people within a few seconds. And that's, for me, the best use case. So infrastructure is really DeFi, should really have an impact first before thinking about, okay, what's going to be the next application? How are we going to bring these products to the end customer? That's going to be the second stage after we've managed to get the whole TradFi on the blockchain.
Yeah, and I think for myself, we look at a very specific sector of DeFi in terms of Bitcoin DeFi, right? Or BTC-Fi for short. I do think it's one of the most exciting areas because in some ways, it's probably the most crypto native area of RWA, where I think Bitcoin is now the asset that's kind of recognized globally by everyday, retail users, by institutions, by sovereign governments, right? And sovereign wealth funds. And I think if you think about it in many ways, Bitcoin DeFi is super interesting because you can almost, as a spicy segment, say basically Ethereum is the test net for Bitcoin DeFi, where a lot of these primitives have been built out to test it. But Bitcoin is the much larger asset that's the cornerstone of our entire industry. And now the benchmark rate for Bitcoin yield, right, has moved from like 0.5% historically into the mid-single digit percents with Babylon staking and Satlayer restaking and all these LSTs like Lombard, et cetera. Right. So I think it's going to be a super interesting year for Bitcoin DeFi in particular.
Great. When I was asked to moderate this panel, I almost took offense at the title because it's a little bit relative. Like it says adoption has lagged, and despite that, TradFi needs DeFi. But like, what do we expect? I mean, has DeFi even lagged? I think to me that's an open question. Like, what you have to have a base rate you expected the adoption curve to look like, and adoption curves when you're displacing an entire industry that's been around for 100 years and is not very interested in being displaced. What do we expect adoption to look like? Is it slow or is it fast? There's a lot of exciting things going on the infrastructure level. It takes a long time to build this. Stable coins are catching on quickly. I don't know, maybe you'll start with you, Rob. We'll kind of bounce around maybe in a different order this time, but wait, is it slow or is it fast?
It's getting fast. I think the biggest blocker is still regulation, and that slow down a bit the pace of adoption right now, but it's getting sorted. So we see more and more institutionals playing on-chain. When you see adoption through Bitcoin ETF, for me, it's the worst way to do it because it's really taking a digital asset and putting on the rail of TradFi. What I want to see is TradFi asset on the rails of the digital assets. And I think this is really what we should focus on right now. RWAs is definitely the space that is going to boom up this year. And we're doing a big push on Etherlink in order to have more and more assets, TradFi assets, to be accessible on chain. And I think with the composability and the 24/7 kind of trading, we can bring liquidity to markets that was very liquid in TradFi. So this is where I see adoption coming from.
Listen, developing on open source blockchains or any open source software and doing so when it is completely permissionless in EVM or SVM, frankly, it's fucking hard. Like, this is not easy. And trying to bring this, these large TradFi institutions who have really, outdated tech stacks and allow them to interact with blockchains in a way that still works for what they do and for their back-end processes, that is harder. And so the expectation that this would have been done already when, Ethereum is less than 10 years old is honestly, or at least done more than it is today, is honestly crazy to me. The reality is we haven't had the infrastructure needed until recently. I look back to 2021 and I was running crypto at a large traditional hedge fund at the time. And, we were talking about being in DeFi and the things that we had to do, like to get a basis trade on, which is now you can just go to Athena and, Athena now is an institutional product, or I can even send, cash to securitize and get a SUSD or IUSD back. The things I had to do to explain how to get a basis trade on in 2021 was like talking to aliens, like people who had never been involved in financial markets before. It was crazy. And so when I look around now, I say all of a sudden, okay, we have the right protocols, we have the right, blockchains are more scalable, they don't break. I remember trying to trade on Ethereum mainnet as a large traditional institution in 2021. It's a disaster. Like you have no idea like when your transaction went through, how they were going to go through, et cetera. And so I think the time is now, and it's been, just the right amount of adoption. We have companies like in our portfolio, one called August Digital, which is probably the first institutional grade DeFi prime broker to really allow people to come on chain to feel comfortable doing that. Those types of companies and portfolios could not have existed before now. And so we're really excited about where we're going. And I think people just haven't taken into account how fucking hard it is.
Yeah, on my side, I'd say that penetration of DeFi within TradFi has definitely been extremely slow. And I basically just blame it on compliance and regulation. That's been the case, right? When you're a bank or a big asset manager, just knowing like a single transaction can taint your wallet and that's it. All your funds are frozen basically for the part of the regulator. That's just a risk you couldn't take, so that's it. We're not touching it. From a technical perspective, these guys can do it. They have, they have the money, they have the teams, they have the cryptographers. Like they've been managing the tech stack for 50 years pretty well, so they can do it. So what you see, the regulation finally evolving, but that's still very at beginning, right? If you take the case of Europe, MiCA, for example, people were super happy when they say, oh, DeFi is excluded from that. And basically, well, you can just run a smart contract in DeFi. But then you look at the details, you're like, well, only very specific cases when it's completely decentralized that fits into DeFi. And what's not that, then, well, that has to be regulated again, right? So until we have clear view from the regulator what actually is DeFi and where it is and where it is not, it's going to be tough. And if you see the way the industry has been working, especially the crypto side over the past year, 2 years, you see more people try to get some kind of gated DeFi, thing like Coinbase has been doing, for example, with their wallet, right? You can move your funds from your Coinbase account to your wallet, and then from there to a subset of kosher, DeFi protocols. That's what we're going to see a lot going forward as a way to basically bridge and segregate DeFi and the TradFi side of the business until we have more clarity on what DeFi actually is, and hopefully bring that to more people and the final user.
Yeah, I think very much agree with Rob. I think this year in particular, we're hitting that inflection point in terms of institutional adoption of DeFi, right? Because especially if you kind of take a look from the more global perspective, right? You have firms like Laser Digital, which is a Nomura subsidiary, direct subsidiary, right? With the explicit mandate to actively trade in crypto and market making crypto. And then you have, Middle Eastern sovereigns, right, putting Bitcoin on their balance sheet and be very public about it. And I think to Rob's point, a lot of the DeFi plumbing that was first kind of pioneered in like DeFi Summer 2021, right, they've gone through like V2, V3, been battle tested and can start taking institutional positions in size. And in addition, I think there's a lot of tailwinds with Bitcoin ETF adoption, right, where you have now, Larry Fink of BlackRock kind of going on MSNBC and like bold posting and like really championing not just Bitcoin but crypto as a whole, right? Where it's I think really turning the landscape to I think oftentimes, right, in kind of institution and enterprise environments, sometimes things flip pretty quickly after a couple first movers from okay, we don't want to touch DeFi, like that's too risky, to what is our DeFi strategy, right? Why do we not have a DeFi strategy? We saw this with Metaverse, right, last cycle, and I think we're seeing this with DeFi now.
I just want to respond to one thing to the regulatory point. I think you're completely spot on for what the attitude has been. The President of the United States launched a token entirely permissionless on DeFi rails literally a month ago. And if that isn't a thumbs up and a green flag to come on in, then I don't know what is.
That's for sure, yeah.
So outside of political meme coins, what are some of the more exciting use cases? So you mentioned August, you mentioned Satlayer. what do you think is going to be? We talk a little bit about the catalyst, but are there specific things that somebody can go out and look at and say, this is a super cool application of DeFi that could be integrated today? Or what do you think what gets you excited and is going to drive some adoptions?
The best use case I see right now is RWA-backed stable coins. I think that as an individual, I would love to have all my investments in RWAs and be able to mint stable coin for my personal needs. If you do that, you have your own equities that is invested and generates yield, and you have a payment system that is very easy to use. So definitely more and more RWAs so that you can use it as collateral to mint stablecoin. I think this is banking of the future.
Yeah, I mean, and I'm saying that not because I'm French, but I really like what Morpho has been doing, Morpho Labs, right, with their protocol for borrowing and lending. And I really like it because these guys, they really focus on a very specific niche-like thing, which is formally proving that you can have something that's completely formally proven, just borrowing and lending. That's all it does, right? Whatever is behind doesn't matter, just matching borrowers and sellers. And on top of that, then just let the final application done by someone else and let other people build on top of it. And I think that's really how DeFi is going to grow. Have a few teams do things very specific that they really know how to do, building blocks. And then on top of that, you just build a lot of stuff, right? To the end of doing, for example, structured products, which has been always the holy grail of generating yield in TradFi. And I think we're going to see that on DeFi as well. But I'm not a believer that someone is going to solve this whole thing at once. We need small building blocks like that. So borrowing, lending protocols, RWAs for treasuries, for example, it's a big component. Then options protocols on top of it to bring that optionality. And then finally on top, you can just open that to a lot of products. And that's why I really like the fact that these guys looking at the base layer, making it very efficient so that you can build on top of it.
The holy grail, in my mind, is primary issuance on-chain. So I find it very frustrating. And, we can talk about, treasury funds, et cetera, coming on-chain. But, it's primarily coming on, and then you're selling these things to foundations, right? And it's taking something that, something on-chain, the capital that doesn't want to leave the chain, they're buying. That's not a big market, right? So for me, the holy grail is taking something that exists off-chain, doing primary issuance of it, not attracting stuff on-chain, and then allowing that to be composable in DeFi, because there's a whole new world of financial instruments you can create now if you've done that. If it's a tracking stock or an ADR or, whatever else, that's not going to bring that off-chain liquidity on-chain. If it's something completely net new, that's going to bring off-chain liquidity, and that's what we need. Right. And so there's some people working on it, nothing that's public right now, but that's what I would look out for. When primary issuance is happening on chain, this space is going to go parabolic.
Yeah. I think from my perspective, once again, Bitcoin, in particular, Bitcoin staking, that's really been unlocked recently by Babylon, right? So they've developed a self-custodial way to stake Bitcoin, which has been the big unlock. And that's where, a lot of institutions have gotten stuck previously, right? Because no one wants to give up their custody of their Bitcoin, kind of their most precious asset. But Babylon's developed a way to get yield that's actually sustainable from securing other proof-of-stake blockchains, right? And do it in a self-custodial way. And they've already, even before launch, reached over 5 billion in TVL, right? So certainly you have put kind of the new BTC fi on the map.
So kind of staying on Bitcoin for a second, I think earlier Luke agreed with Rob. I think that might end now. But where does Bitcoin fit into this? Besides the restaking and earning yield on your asset, are there other places that Bitcoin can play in the DeFi ecosystem? We're here at InnovateDenver, but how does Bitcoin play into it?
Yeah, so I think we're at a time where Bitcoin is actually proliferating through the rest of crypto. And so what I mean by that is, there's been new wrapped Bitcoin assets like Coinbase's CBBTC, right? FBTC, which is actually backed by Bitmain and Mantle/Bybit, as well as Kobo, which is one of the leading kind of Asian custodians, right? As well as, all the changes of WBTC, right? So that's already a changing landscape. And I think overall TBL there has gone up by, I think almost doubled from a year ago, right? So even aside from the growth in Bitcoin price, it's actually grown significantly. In addition, there's been this rise of this new class of Bitcoin liquid staking tokens. So basically Lido equivalents, but for Bitcoin, with Lombard, Sol, Pump, BTC, right? And so all these are, kind of Bitcoin wrappers that are on Ethereum, on BNB chain, on Sui, on Solana, right? And really kind of plugging Bitcoin into the broader DeFi ecosystem, and kind of powered underneath by Babylon. And then for us, we take these as collateral for restaking.
Yeah,
If I cannot add a word maybe to that, I definitely think that Bitcoin staking is a big deal, because if we want to onboard trillions of assets on chain, we're gonna need more than our own staking power to be able to secure those assets. And using Bitcoins as an additional layer of staking and securing this transaction is definitely something that is going to be needed in the coming years.
Yeah, I'm kind of bearish, honestly, on the topic. So listen, I think, not to overstate it, but CBBTC I think is $3 billion today, right? You add in all of these other, BTC wrappers and everything that's happening in Bitcoin DeFi, and we're talking about, I think, sub $10 billion today in total for, an asset that's, multi-trillions of dollars, right? It is de minimis. It's essentially quite small. And people do want to use Bitcoin as collateral to do other things. I don't actually see, at least, in conversations we have, that people want to do anything else with that Bitcoin. Like collateral to lend against because they don't want to sell it, or borrow against because they don't want to sell it. Sure, absolutely. But it doesn't strike me that is actually the core of what we want to do in DeFi, because people still mostly want to do things the US dollar denominated assets. And I think that's the way that most people are thinking, who aren't just Bitcoin OGs. And so we see some of that, but we see a lot more of this type of collateral borrowing, happening off chain than we see happening on chain.
Yeah, I'd actually take I actually like the collateral aspect of Bitcoin, not so much for the borrowing and lending, because I kind of agree with you on that front. But I think as we see the growth of derivatives on chain, which is not so big today, to be honest, right? But if you really consider Bitcoin as a store of value, and if especially the big traditional institutions start hoarding on a lot of Bitcoin because, well, store of value, then they can start using these to just collateralize a shitload of derivatives positions out there that they might trade oil, equities, whatever, FX, right? And that's really where you just plug it in there. It doesn't move. It's not a problem, but it just supports the whole system. And that's really why, well, that's store of value. So instead of putting cash, you could put Bitcoin, and we'll see, I think, that use case grow in the next couple of years.
I think the problem, though, is that you're not seeing them do that on chain, and they're not going to take it out of custody, right, to do that. And so
if they can move it, yeah.
Yeah, so the when we're talking about TradFi participating in this, they're only going to do it at CFI, off exchange settlement, or some sort of CME. They're not putting Bitcoin or backed Bitcoin in a smart contract, right? That's not something that we've seen. Maybe someday, and thank God, hopefully, but that's not going to be something that happens in the next few iterations of this thing in Denver.
Yeah, I've had it in the ultimate goal, as you mentioned, not tomorrow, but yeah, I'd like to see that a couple of years from now.
Yeah, and then I'm certainly happy to take the bull case on that and say next year when we come back in Denver, right? I would argue, right now I think in terms of pure Bitcoin staking LSTs, it's about $6 billion, give or take, in TVL, and I would argue when we come back next year, it'll be 10 times that.
I love the optimism. All right, last question. As we think about sort of new ways of doing things in DeFi, and we think about the traditional system, I love the idea of replacing the old system versus converging with the old system. How do you see this playing out as DeFi expands? I think some people have the vision that there'll be just an alternative side rail that people can just jump over to and live their lives over there, but there's obviously a lot of interaction between the two. TradFi Needs DeFi is the title of this thing. How do you see this playing out over a longer term horizon? Will there be a replacement of the old system, or will there be a convergence? Will JP Morgan and still be around? What's going to happen in the next 10 years on this?
Yeah, to me, it's a replacement of the old system in terms of infrastructure. Definitely, it's more efficient. It's 24/7. It's instant confirmation, etc. So definitely, it should replace. We are going to start with the most inefficient markets in TradFi in order to prove our case. So where there is illiquidity, where there is fragmentation, where there is borders between markets, definitely blockchain is going to be a huge gain in terms of efficiency. So let's start with that, and I'm sure that we will onboard the rest of the market.
Yeah, it's probably in my mind, anywhere in the near term, it's more of a convergence. Now, I do think, I mean, you can listen to like Vlad Tenev over Robinhood or Larry Fink or whoever, tokenization, everything's coming on chain, etc. Totally agree with all of that. I think how those institutions are on chain, how that fits within, their current back office and accounting systems, that's probably more of a convergence. Like the near term, what we're seeing anyways is, I think the last panel talked about permission chains versus permissionless. Permission chains are dead. That's going away. Like those do not work. They do not want to segregate liquidity. But what is probably happening in mass in the near term, this from the conversations we're having, is, the same instances of DeFi, Morpho or Aave or Pendle or whatever, some sort of shared liquidity, but pools that are allow list at the token, smart contract, or the token level, token contract level. And that's where we're seeing a lot of interest from the BlackRocks of the world right now, or from the, name your financial institution right now. And so I think we're going to see that, within the next year, we're going to see billions of dollars of more TVL and those types of pools through that type of infrastructure. What it looks like, many years from now, well, we're still going to have to do KYB. Like it's not going to be completely permissionless, but there is going to be more interoperability, and then using those, call it, tokens that will exist in those, allow list type protocols or allow list type pools to then, through stable coins or wrap versions or whatever, permeate the rest of crypto. That's coming, and that's coming right away.
Yeah, I mean, I agree with all of that. I feel like convergence is going to come. But big traditional institutions, I believe, that are very monolithic today because they've been doing the whole thing from settlement all the way to distribution. They're really going to have to start thinking about where they fit in the value chain. And like the Goldman Sachs of the world, basically where they make the money is in distribution and managing the money, right? And they'll still be doing this. And they will just, externalize all the settlement, moving things around to blockchain. It's been hard for them because they need to be able to operate on public blockchains and everything, but they will do that. But they'll keep just the distribution, which is where the money is. And I mean, let's be honest, right? You will still need someone to talk to invest your money. For as much as I like the fact that, well, I'm just going to go and learn about all these things and invest my money myself, you will still need someone to help you prepare for the future and like invest for your retirement. So they will keep doing that. They'll just use the tools of DeFi in order to bring these products more efficiently to the end customer.
I think medium long term is actually where it gets really interesting, because when you look at it from a macro perspective, I think we've almost forgotten back at the beginning, like this has been extremely turbulent 5 years, half a decade already. And the remaining 5 years are going to be probably as turbulent, if not more, right? We probably all forgot January 2020, Iran almost went to the war with the US, right? Then we had COVID. Then when we finally thought, oh, we're almost done, Ukraine war and then Middle East conflict, right? And then now we're in this, again, chaotic era, right? And I think where the world is moving is, I think a realistic speaking and maybe a bit of a spicy take as if like US is slowly on the decline in terms of global influence. And I think it's going to be unclear how it plays out, but a likely scenario is like a Western sphere of influence led by the US and an Eastern sphere of influence led by China, right? And so when you have that kind of fragmentation of global systems, right, what's going to be kind of the dominant financial rails? And that's where I think DeFi is kind of the contender, because you're already seeing a lot of BRIC countries, right, starting to use Bitcoin or DeFi rails because they're getting, Russia in particular getting debanked from SWIFT. Right. And so they have no other choice but to use these alternative rails. You're seeing a lot of emerging markets, right, adopting DeFi because for them, it's the leapfrogging that, China did, right, with, smartphones and leapfrogging, like WeChat Pay leapfrogging credit cards, right? The same is happening in emerging markets. And so I think it's going to be a super interesting time for DeFi and for Bitcoin in terms of like the next 5 years.
Interesting. I think it will be. So awesome. Thank you so much. Thanks for listening. Round of applause for our panelists. And see you soon.